But like you need to have your real actual system in place like 99.999% of the time don't deviate from it.
The message here is we're what?
Degenerates.
Degenerates?
But no, you are. Welcome back, everyone, to Be the Trader. Today is going to be a fun day because I got Bryce, Tuohey, and Matt Monaco. Woo! The one and the only. I can't say the one and the only, right? But the two and the only.
Yes.
From Stocks to Trade here on the show. And we're going to talk about random stuff, but obviously trading related, right? Mm-hmm. And I kind of want to start off really by just how things have been going. Like, how are things been going for you guys? Like this past week. And today is, what is it? We're in November.
Yep.
And the first full week of November is over for trading. How's it been?
Good for me. I've been sick. Traveling and sick. But honestly though, like all things considered, normally that would lead to a red week for me. Nice little green week here. No complaints. Nothing above or below average. So
nice.
No complaints there.
Yeah. So last week was like the best week I've had probably in like 6 months or something. Really awesome. Just good trading. Definitely got a little overconfident. I was like, this week I was like, I'm going to start trying to trade some options again. I can't tell you how many times I've gone down that rabbit hole. Never works. So I've actually read a little bit this week, but it's fine. Like proportionally, it's like 10% of what I made last week. So
you can basically,
it's part of the game.
You can assume if Matt has a really good week, the next week options are in play.
Is that your gambling itch? Like you're like, you know what?
Yeah,
100%.
Literally.
That's slapping the spot.
It never works, and I still I just go back to it, and I'm like, I don't know. I like the pain, I guess. I don't know what to say.
No, okay, but like if we're being completely honest, I think it's a really any trader has some kind of gambling itch. The consistent ones control it in a way, but like I have my lotto coupons. You know what I mean? Like we all do.
The stupidest part is like I could buy the shares. Like I have enough money in my account to just buy the shares. And I'm like, nah, options. and then like typically like I'll buy out of the money calls because I'm just stupid. And then
with the shortest expiration.
With the shortest possible expiration, maximum risk. like
so he is. You are scratching the niche. You're like, you know what? There's no rules.
But he's always, no, like right away, he's always right though.
No, always right. And then like I'll be like, it's going further. And then like if I would have bought shares, this trade would have worked perfectly. Like
it would have been a great trade.
And I just give it too much time, and then eventually I'm like, this is stupid. Like I'm down on my option now because the time decay just killed it. Happens every time I trade an option. Every time I buy an option, it happens. It's dumb. I have no excuses.
So I mean, a lot of traders probably face this all the time, though. Like a lot of traders they have a good day, a good week, and they're like, you know what, Bryce? I just had my best day ever. And then what happens the next day?
Oh, you oversize or you buy options, or you decide you're going to become a swing trader, or you just do something degenerate because you're like, I've got extra money.
Yeah, but in order to stay consistent like you guys have been, you got to somehow like rein that in. Like, how do you rein that in? Because I know you're joking around, like we're joking that you always go to options, but you're not betting the home. You know, so how do you rein that in? Because for a while we've all been there, and sometimes I'm still there where I'll like kill it, and then I'll have a drawdown, right, and then kill it. So like, how do you control that momentum of fluctuation? Hey, we wouldn't be able to do these face-to-face interviews if it wasn't for our sponsor, Cobra Trading. So if you could just give them a few seconds of your time, we'd really appreciate it. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show.
Yeah, I think like I joked I liked pain, but I think pain was like
I think Matt should answer this.
I think pain was the best teacher, like, because I did that for a long time, and that was like the biggest reason I wasn't profitable for the longest time. Is I'd be consistent 2-3 weeks, and then it just that big loss would come because you do something stupid.
Yep.
You bet way too big. You start trading something else that you don't know, and then you're like, now you're back either at square zero, or sometimes you lost even more than you were up. And like, it's just enough times you do that, you're like, it just hurts so much. Where like that habit is tough to break. It's very difficult to break that habit. But now like the options trades I make are like smallest of the small risk. I still lose them all though. I shouldn't even make them in the first place. Like I really shouldn't.
But you still got risk management in mind.
Risk management, maybe after enough times, and I said this like after the last 4 or 5 times I've traded options, maybe I just need some more pain. I just won't do it because it just doesn't work. So like why do I do it? Why?
I almost say like if you're going to do it, you have to know you treat it like you're going to the casino. Like you have a maximum amount. No, like really. I'll do this every now and then. I'll be like, okay, for some reason I really like this. I'm going to buy an option, and if I'm going to lose, I'm going to lose like half of my risk. And I don't do that. Like you can't do this every day and be like, well, I'm going to lose half an hour today. No, it's like, okay, maybe like once a month. It's like my lottery ticket. You know what I mean? Like I know I am probably going to lose, and it's just going to be for fun. And if it works, cool. I'm buying myself a nice dinner. But like you need to have your real actual system in place like 99.999% of the time, don't deviate from it.
The message here is we're what?
Degenerates.
But know you are, right?
No, you have to know you're a degenerate.
Yeah,
like,
so we hit the acceptance stage.
Yes.
Now it's okay. Like we're
yes,
recovered.
100%.
Like, I know this is bad for me, but like at least I know it's bad for me. I'm gonna do it.
Yeah, it's like that's how I look at it.
allocate from my degenerate side and I allocate from my real side.
No, the difference is like for me, like I'm not even joking. I took a Tesla call like at highs the other week. I made 100% on one of my options. I lost 100% on the other. So I ended up break even on it.
Yeah.
Because I was like, okay, this time I'm actually to take off a little bit instead of going for a 700% options move. It's already at the top. No, like of course it's not going to keep going higher. But that's how I look at it. Because I don't use like big size when I do it, and I might do it once a month, maybe.
You know, when I put up the word, just very curious when I say ego, like what do you guys think about when it comes to trading with ego?
Ooh. Do you want to answer that, or do you want me to?
I can answer it. For like, I had a Post-it note. Like, I was a big Post-it note guy, and like, you just stick them on your computer. And I had a Post-it note for a long time that like smart people don't like to be wrong. And I think that was a big reason I let the big losers in, because like I was always good in school, and like they're like you have to know the market's always right. You're not always right as a trader. You're gonna lose, and when that happens, like you gotta cut the loss. And for me, it was a mindset shift of like what is right and wrong, and like trying to move away like right and wrong based on my ego versus like if I had a good trading plan, like then that was like helpful to my ego / I was also right, right? So for me, it became right and wrong on like the trade plan level and like detaching it from the money. That's my answer.
Yeah.
Judy?
When I hear the word ego in trading, the first thing I think of is everyone has one. Whether you're new or experienced, everyone has it. And you can't get rid of your ego completely. You have to, it's like emotions. You don't get rid of your trading emotions, right? You learn how to deal with them. And for me, I notice my ego gets the biggest when I'm on a winning streak, which is good because it does allow me to keep pushing size on the right setups. However, it also, that same ego can put me into a hole when I was trading SGOC, I think about 2 weeks ago, and I was up probably for one of my biggest trades ever, and I wouldn't lock any of it in because the ego. I had been stalking that trade for so long. I'm like, I know how this ticker works. Well, the market actually knew how the ticker worked a lot better than I did, and my ego ended up turning that into like half of my like half of an R to R, whatever you want to call it. And it was because my ego got in the way. So like that ego will humble you. So it's learning to control it. After enough of those, like, you have this big plan and you're right, and then you hold and it either turns into break even, a small win, a small loss. Like that'll happen enough times. You'll learn to control it. But everyone has one.
You know, it's crazy. You said earlier that you know, and we joked around too that we'd allocate some money for the degenerate side, or you also said that a lot of traders hit this problem where they'll trade and they know what they're good at, and maybe they just trade, they had a good run and they trade other things that maybe aren't really their setup, maybe too oversized. And we were just talking about that whole idea of like overconfident and egoness, right? And just from a personal standpoint, for me, like I was struggling with, for the longest time, from I think like last 3 months, I was like chop, 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 chop for me. And I think you mentioned this on a previous interview when we had a talk, that you realize that you have to take profits sooner. Where I was stuck in the mindset of I'm an all day fader. Like I love holding stuff all day. And what was happening in that time? Came all the way back. Came all the way back. And I was so stubborn to stay and stick to my plan, because I was judging myself. How you mentioned this in a previous interview with me, that you said that you used to just only stick to your plan and like, I gotta stick to my plan, instead of listening to what your years of experience are telling you that the price actions might signifying that you might want to adjust your plan a little bit, right? And speaking of that, all that explanation, I'm bringing that all full circle because the ego of mine, right? What happened to me is that like I know what I'm good at, I'm doing well, and then I was like, you know what? I want to branch out and do other things because I want to become a more diverse trader, because maybe my setup only comes up maybe once every other day, right? Maybe that's the case. And so what I started to do to help me personally with my ego, and I'm just very curious on your take on this, or if you suggest to people to do this, but I actually started to day trade my real account with only my setup. And then I started to paper trade like the ones I want to get good at with a paper account, right? And then I swing trade a real account because I love swing trading too. But what I've noticed is that really helped me to only focus on my real account when that signal comes, like OCGN the other day when it just melted. Like when I finally saw that, I was like, oh, turn that off. Let me get my real account and trade that one only, focus there, and nailed it. And because it's my setup, right? Any thoughts on that? Like in terms of people like using it as a strategy to get away from like kind of like, because my ego would get in the way. Like I'd be like, I'm doing so hot, but every time I go here, I'm not. So let me know what? I'm gonna go here and scratch the itch, but not lose money.
Right. I think Matt Monaco needs an options paper trading account.
You know what I'm saying?
To answer that question.
I think honestly, almost going back to the way I said it is like earlier, if you're going to want to scratch that itch, do it with such small size that the loss is irrelevant.
Yeah.
And that's how I became consistent in the strategy that I'm using now, is by using such small size that like a win or a loss didn't matter. The experience did, and allowed me to gather data on myself. But if you're feeling the need to trade setups that are outside of your realm, size it down to like dollars or even pennies, where like you're trading a share, 2 shares. One, you're gathering data. Maybe it ended up becoming a profitable strategy and you didn't even know it because you were oversizing on it and cutting at the wrong risk levels. That's the way I personally would go about it.
I love what you said, because I'm actually I trade it like it's a real account. Like don't get me wrong, and I'm checking every single trade and everything because I'm thinking like Matt, like I'm scratching that itch, but it may be profitable, right? At one time. And if it is, then I can move it over and actually risk real good money on it, right? So like, I love that you said that, because either trade small or just don't risk money, or, risk, what you can lose, whatever it may be. So I just really wanted to get your take on that, because that's something that I personally decided, and it really has like helped me a lot. Like it's helped me a lot to where I don't have to like tread water anymore. Like I can just stay consistent the entire time, and I can tread water in something that doesn't matter. Does that make sense?
100%.
Now, I'm very curious on, whenever you guys are helping people, what have y'all found, and this could be different for either one of you. It doesn't have to be the same. And it'd be great if it is different. It's fine if it's the same. But what have you found has been the most common difficulty for a trader when they come at you and they're always like this, and you're like, oh, I always hear this?
I think for me, one of the most common ones is like, and I heard Matt talking about this on your guys' interview earlier, and it was really like traders not completely understanding. If I'm looking at a daily chart to determine a pattern, to determine a bias, I will see multiple different stocks. Obviously, no one setup looks the exact same candle by candle, but I'll understand that same setup. And other traders that haven't seen that setup as often are like, why are you looking at this? Why is this? Why do you consider this a breakout? And for me, it's like, this is why it's a breakout. But if you haven't seen that setup enough, You might not see that because for me, and I know Matt trades the same way, like we're playing in anticipation of a bigger picture move. And for me, getting in early allows me to get a better risk reward, but still getting in at a confirmation spot. So I have, of course, the breakout hasn't actually come yet. It's the potential there. So as a newer trader, I see a lot of them not able to spot that anticipation yet through the development that's already happened.
Anything that they could do to help them? We literally
Look at
just
this.
asked,
Are
like,
you
anyone
kidding me?
mute their phone?
My alarm went off.
That's
you
okay.
can dress them up. You can't take
It
them out.
it doesn't even matter.
I didn't even realize it was an alarm. Apologies.
What would you say for someone who wants to get familiarized with like seeing that? Like, do they just need the time?
Yep,
Like the
screen time.
Screen time.
100% screen time. And right now, we're probably in one of the best markets to do that. There are over the past, what are we now? Almost going into 2022.
Crazy.
There are
Nuts.
2 years worth of absolutely crazy runners that you can go back and just dig through those daily charts, different spots before the run, after the run, months before the run. A lot of times, the biggest runners have very, very similar structure leading up to that. Now, there are a lot of similar structures that do not end up leading to those crazy parabolics, but studying all of those charts, you'll end up seeing a lot of structure before these runs and similar structure after these runs that I would say will help you spot them ahead of time going into a new trade.
Awesome, mate. What about you, Matt?
Yeah, losses are like where in like cutting a loss. Like I still get this, and it kills me because like I preach it, we all preach it. Like the big losses, like, and people will ask me like all the time. They're like, "Hey, like I have this big loss. Like, what do I do?" Like, well, how'd you even get in that position? Like, why are you in this position in the first place? So like learning to respect a trade plan is so hard. Like, and cutting that loss because people don't like to be wrong. People don't like losing. And if that's you, like you're in the wrong space. You're gonna lose as a trader. You're gonna be wrong, and like you're just taking like a mathematical bet, an educated bet that you're going to be right more than you're wrong. Your risk is going to be less than your win, and it's just a numbers game at that point. Like you can really boil trading down to just like basic statistics, and then like you put yourself on the good side of those statistics. And if you can do that, like you're going to win. And with that, like it's like flipping a coin. Like it's going to land on tails if you're betting heads like a certain number of times, and that's just part of the trade plan. You got to take the loss. It's when you get those big losses in there that like becoming a profitable trader is nearly impossible. It's just you can't do it. Like it destroys you mentally, it destroys your trading account, like all of it.
Do you suggest like hard stops for people who can't?
Yeah, I did hard stops for a while. Now, depending on what you trade, you can or cannot do them. Like if you're like a lot of people get into OTCs. We're approaching kind of OTC season, usually that first couple months of the year. Like you can't put a stop on an OTC.
Explain why.
It's just the fundamental way the markets work, right? So the NASDAQ market, the most common one that everyone has access to, even like Robinhood traders and stuff. Like it's listed, it's electronic exchanges, like it's computers doing it. OTC is like pretty old fashioned. They still have computers, but there's like actual manual market makers still there. So if you put a stop at a certain level, you're not getting filled to the bottom, guaranteed, because they know your stop's there, and they're going to walk that down and just screw you over. But you put that order in, you let them do that to you. Where on a listed stock, you still might get that slippage, but it's not going to be as severe. Like when those orders pile up and you get either that euphoria or that like panic, it is extreme in the OTC market. Now, if you're just trading listeds, you can put those hard stops, I would say pretty confidently. Sometimes lower float ones, it's wild. You got. If you're gonna put a stop, you gotta make sure it's at a level. Like it breaks this level, this trade's not working. Right. So whether that's a little wider for you, but I used stops for a while because like I always came up with excuses. I'm like, oh, like it hit my stop, but let's move it down to the next level. Right. Like everyone's done that, and then like that's how those big losses happen. You're like, oh, maybe if I add a little bit and move it down, it'll work, and then it just doesn't work as well. And that's what builds those big losses. So just get out. Just get out of the trade, reset, get the small loss. It's no big deal. Like move on to the next thing.
When it comes to like support and resistance, how do you visualize that? Like, do you see it as a hard cement wall? Like, how do you see it?
I hate the answer, it depends, right?
Okay.
I truly think it does.
It does though.
I truly think it does depend on what you're trading. like a NASDAQ stock, it's kind of a zone, right? Especially like, algos get involved and whatnot. They might break it below day like a penny or two and just to rip it back and screw over short sellers, stop out all the longs because they have the power to do that. On the OTC market, though, I would really argue that it is like defined. Like it's a stable line. You're like 10 cents or whatever, right? Like that is the support. Under that, it's just not going to work because not only like it's a slower moving market because the orders execute slower, but like a lot of times there's a big buyer there or something like, and that gets taken out. Like everyone sees it. There's a lot of OTC traders these days. Everyone sees it and they're all looking at the same level. So it's like becomes a self-fulfilling prophecy. If that level breaks, it's just not going to work because everyone's trying to get out of it.
What about you? Same thing, Bryce, or is...
Yeah, like almost to a T.
You're like, why'd you take my answer?
No, although you know what though, I will expand it. The OTC, that's like 100% true. And with listeds too, though, I'd argue that like support and resistance for me, and this is why I love playing out of consolidation breaks. Like sometimes you'll notice those descending and ascending patterns where like it doesn't necessarily need to be a specific price. If you see, and I'll see it a lot of times in the tape in the level 2 where a seller is walking it down, it's sometimes over the course of a few days on a stock, right? Like that, once that seller is taken out that has been walking it down, that might free up some room. Of course, you're going to have areas of like very high volume. That's obviously going to matter more than, if a stock is basing here, but on low volume, but a stock, peaked out on so much volume, that level of more volume is probably going to matter more. But anyways, no, like that consolidation can also act as support and resistance as well.
Okay. And I'm very curious, like whenever you guys think about art versus science, like what would you say? Is it more science the way you trade or more art?
Art for me.
You want to elaborate a little bit? Like, was it science at one point or like?
It's like Picasso over here.
Yeah,
I know. My trading is something like the Mona Lisa. No, I think there, at the end of the day, there are two types of traders. Two ways. There's discretionary trading and basically, I'm not going to call it algo-based trading, but like a trading system that you could literally program into an algorithm. And for me, I'm a lot more discretionary. Like I see a lot of indicators that line up for me that I might not necessarily be able to plug into a computer, but I've seen it enough times on the charts that, okay, all of these factors have lined up. This is where I'm entering. But every now and then, like it doesn't need to have all of those specific factors if another variable is stronger than it normally would be, right? Like if I see, I can't even think. But okay, if I'm seeing something in the level 2, if I'm seeing a big seller being chipped away, and then all of a sudden it just rips through, I might not need other areas of confirmation. I might not need that trend break that I'm normally looking for.
Oh, that makes sense.
You know what I mean? And like, I cannot go program that into a computer. I don't know how to. I'm not smart enough. So like for me, it's definitely more of an art that it's been proven over time. There obviously is some like data. There's a ton of data that I have to it, but still very artsy.
What about you, Matt?
Artsy. I think it can be both, right? To be clear, like there's algos that work and the science behind it. I'm definitely more on the artsy side, though.
Artsy, yeah. You like the word? I know you
use it too.
Picasso part 2.
We're building off each other here, right? Like the Mona Lisa. I'm more of like a crypto punk.
Get out of here! Get out of here!
New art, right? The Web 3.0 version.
We'll let that go.
I was hoping it could be like Vincent Van Gogh or something, but okay.
Yeah,
go with CryptoPunks.
I'm beyond that. Like,
hashtag.
I'm in the metaverse. You don't even understand. It's out there. So, more artsy to answer this, because I tracked the data and like it was instrumental, right? Totally was. But for me, at the end of the day, what helped the most was actually just like printing out like all the breakout charts, and I have them. I think they're upstairs in like my safe. So they're in the safe. They're very important.
Are they still in that binder?
Yeah.
They're in a binder.
Yeah.
There's like hundreds of them. Thank God we were at college and I could just print as much as I want.
I know.
Oh yeah.
I remember that.
But pro tip: if you're gonna print your charts, like change the background to white. It's gonna save you way more ink. Let me
He's like, why is this chart taking 10 minutes?
Exactly. Huge pro tip there, and then you can actually write on it. But like just the visualness of like seeing the breakouts over and over again, writing on the charts, drawing like with a ruler, like drawing support and resistance lines, and like understanding that definitely, like I would say, puts me on the artsy side. There's a lot of factors that, you know, maybe one day like there could be an algo, there might be an algo out there. Like if you boil it down, you might be able to make it really scientific. But a lot of the game time decisions I make are like discretionary based on just the experience I've seen over the years.
Flexibility, like when it comes to trading, how important is that?
Huge.
No, I would agree.
Huge.
Because going back to, you mentioned it very briefly earlier, like you should be able to change your trade plan like all the time, especially when, well, not all the time, when a new factor comes in. Like you made a trade plan with all these variables. Okay, well now you got a new variable that entered the equation. Well, now your original trade plan's not the same. There's another variable you have to deal with. So at that point you have to make a new trade plan, and you have to be flexible enough to be aware it's happening, and then make a trade plan, a game time decision. Maybe the thesis is the same, maybe it's not. Like, so yeah, flexible.
I'll give a good example to that too, because it happened yesterday on I was trading. It was, the ticker was RDBX, and there was basically, after it spiked up, I got in at like $16, and 18 to me seemed like pretty like set in stone resistance. And so after it got through that, I was already out of the trade, but I wanted to see how high it could go. And had I still been in, there was a massive hidden seller that came in after I thought was pretty clear resistance that just would not let it get through and hold 19. That's a new factor that came in. That was not necessarily resistance that I had seen in the chart, but there was a seller there nonetheless, and that's a new factor.
Yeah,
so
absolutely.
Yeah, I think that's a good example to use.
People are probably hearing this and they're like, well, wait a minute. Y'all say stick to a plan.
Right.
You say create a plan, trade the plan, and stick to it.
I know.
So this is the frustration that people probably have, right? Talk to that trader, because they're like, Matt, I hear you. Wait a minute, Matt. Like, I always hear stick to a plan, but now you're telling me it hasn't hit my stop, but I need it. But there's new variables that can you help them?
Yeah,
so Matt,
I'll help them.
Yeah,
here's the crypto punk artsy coming at you. No, a trading plan, like you make, it's a thesis, right? And a thesis, like scientifically, is supposed to be tested. Like this is what you think is going to happen, and you're essentially trying to predict the future, and no one really knows what that is. So you're at a certain moment, you're like, this is everything I know. This is what I expect to happen, and you let it go. And there should be some like open-endedness to that plan, right? Now, what should not be open-ended is something like a risk. Like, that risk gets broken, just get out of the trade. Like, that's non-negotiable, all right, just to be clear. But if the trade starts working on the long side, say, we're mostly long traders, like, okay, what are you going to change? Maybe you're going to move up your risk level. Okay, that's awesome. That's a very good thing you want to do. That's, now your trade plan is different. You've moved up the risk level. Maybe you're going to add more size. That's another variable you can add. Maybe it broke out and like is just downtrending. Like, I don't know. Just
what about the variable like
come up with any scenario.
It double tops on you, but it's not in the key resistance area, right? Maybe the key resistance that you're looking for in this case is like 50 cents away, right? But you got a 50-cent move, right?
Right.
And it's all of a sudden it tops out, and that's normal. But then it comes back and it tops out again. Yeah. Right? Is that what you mean by variable, where you're like, you know what, maybe I'll take it off?
Yeah, so like what happened at that double top? Like, was there that big seller? Maybe you did or did not see them, you know, but now you're like, okay, like I have this double top I have to deal with. That when I first made my trade plan didn't happen. So like, what am I going to do? Like, maybe you were thinking about adding more size. Now maybe you don't add more size because you're like, now there's this unknown variable, what's going on at the double top. Maybe you've moved up your risk at that point. Maybe not. Like, maybe it's still your original trade plan and you're like, look, like I don't know what I'm going to do and I'm just going to stick to my original plan. Like, that's fine. Like, you bought into that plan in the first place. You should still at this point be comfortable with that original trade plan. And then that's where I would argue you should stick to it. Like, because of the risk. It all comes down to the risk level. Like, that's non-negotiable.
What about you, Bryce?
I was actually just about to say well said, but like, yeah, you... I mean, like, no, it's
the power of the metaverse.
Yeah, I know. Picasso doesn't have a whole lot to say over here. No, I mean, like, exactly like Matt just said, you have to change it. You never change your risk. Like, and the reason why is like the chart never moves down. So like, why you can't move your risk down? Like that risk that you originally set, is still there. But, is the trade either, for me, the reason, sometimes I'll get out of a trade early, because I know Matt kind of gave a few examples of when the trade starts to work, but other things come up. Well, if the trade tried to work a little bit, maybe we didn't even get to anywhere near where I'd want to start taking profits. The biggest reason I'm going to get out early is if I see a big seller coming in the tape or a big seller on the level 2 that should not have been there. It was before a key area. Not saying it's going to just collapse, but more often than not, I've found for the way I trade, when that big seller comes in, it's going to hit my risk. So I'm going to get out early, and if it doesn't, and it hasn't made that big move yet that I was hoping for, there's probably a good chance I can get back into the trade with the same risk level, maybe a better one after the chart develops more. So I might still have that same overall trade thesis, but I'm going to switch it a little bit. And that's actually another thing too, is like, for me, a trade plan doesn't necessarily need to be, okay, I'm going to enter at this price exactly and then sell at this price, then add at this price. This is what I think the trade should do over the next, throughout the day at some point today. I don't know exactly when it's going to do it. I don't know exactly when I'm going to enter, because that chart on the intraday might set up a little bit differently than I expected, but maybe I have a better risk level if I wait longer. So like for me, the trade plan doesn't need to be so detailed that it's every single down to the T. It's like, this is what I think it should do, and I'll play it accordingly depending on how it sets up.
No, that makes sense. But what about, y'all mentioned both. Y'all both said it, either hidden seller or tape, level 2. How much of a factor is that for you in your trading? And do you think it's like super important for a lot of traders?
For me,
and then for you too as well.
Yeah, I'd argue it's probably a little more. I don't know though. It's probably important for Matt too, but like for me, it's more of a confirmation.
Matt's like, let me answer my own question.
Sorry, NFT punk, crypto punk, whatever you are. No, like for me, it's more of a confirmation factor. I'm still going to be playing based off the daily chart, the intraday pattern. The level 2, a lot of times for me when I'm entering, is based on like implied volatility, like the size of the bid at a key level, the size of the ask at a key level. It's all right. If bids are stacking at a key confirmation area for me, good sign. If a big ask is getting taken out at a confirmation level, good sign. So that's like more of a sign for me to say, okay, this is this is the right spot. I'm right on this spot. I'm going to enter here. Maybe I'll even take a little more size if I see massive bidders coming in below me. And on the flip side, if a stock is coming up, I see it a lot. If I mark out a key resistance level where I think the stock should hit, there might not be a big seller there, but clearly someone is selling. Like if I'm seeing 100, 500, maybe 1,000 shares on the ask, but 10, 20, 30,000 shares are going through and it won't break. Okay, perfect. That just confirmed that it hit the resistance level. But I also see that someone is selling hidden size, which that means they're like trying to keep it down on you. They're trying not to be obvious about it. If I wasn't going to take off full size there, I'm probably going to take off a little more than I wanted or was originally planning to. Again, more of a confirmation thing for me, not like it's not justification to enter or exit a trade completely most of the time.
Okay.
Yeah.
No, that's good. I'm going to build on that a little bit. For me, like, I'm going to hit y'all with it depends, right? Like, in that you have to be, that's why I fell on the art side versus the science argument. Because science would say, no, like, this is what should happen.
Right.
But trading is very much, it depends. Because, yes, there's algorithms involved, but you're still, at the end of the day, like, more times than not trading against people, right? So you're trading against human nature. And that's not scientific. Like, it's just not. So going to the seller example. For me, like, it depends. If there's a big seller at that breakout level, at that resistance level, that's expected. Like, I'm expecting that. That's fine. The biggest example I see of like a trade not working, and it happens a lot, and you have to be aware of it, is when a stock breaks out, like, it should break out. It shouldn't like break out by like a penny. And there's a big seller at $1, and now there's a big seller at $1.02. Okay, well, that's a red flag, right? A great example, I actually caught this on a live trade on the Stocks Trade channel. It was a HCWB, I think was the ticker.
Yeah.
And it broke out, and at $7, like that's a whole psychological number. That's okay. There's a big seller there. That's expected, right? But then immediately it jumped up like 8 cents, and there was a even bigger seller at like $7.08, and I was like, nope, like, I'm out of this. Like something that's not right because it just got over that big seller. There's now another one. Like there's a red flag, right? I like to think of it as like you're running. You can only like run so far and break through so many things, and you just broke through that big seller, and now immediately there's another big seller, big hurdle for you to jump over. You're not going to make it. Like the trade's going to fail.
Imagine like climbing this massive wall, and you're like all exhausted, and you get to the other side, and there's a bigger one. Like, I'm done. I'm going back. I'm going back home.
Exactly. That's perfect. Perfect.
That's a good example. I like that. It's like, oh, Jesus. Like,
everyone's going to be like, Bryce is a quitter. No, I'm not. I'm just realistic. I'm going home. I'm taking a nap.
I'm very curious on, you guys help a lot of traders. Y'all help them out. You show them what you know, how to be successful, how to be consistent. And since you're disciplined, you stick to certain setups, you're probably teaching those setups, right? Mm-hmm. Why is it difficult for traders to gain success in if you're all teaching them a setup? And they're, obviously the setup itself can't be that difficult. Mm-hmm. So why do you feel like there's so many who just don't make it, and the ones who do? You know what I'm saying?
You want me to take it?
Well, let me just give a little quick one-liner, and then I'll let you take from there. Because we're discretionary traders, like it's not a science. And I'll let you build on that now.
No, your one-liner was in line with my speech here. Like
perfect.
Okay, go ahead. Just the introduction.
We've been friends for so long.
If you've listened to this far, you've heard it depends. It's artsy, like that.
CryptoPunks.
There's all these factors, all these red flags. Like there's a lot in this podcast right here that we just broke down, and like that's why. There's a lot of factors, and even like if you've been in this like 6 months, like some of the stuff we've said, like maybe you can like factor in a little bit of it and put it in your trade a little bit, and then like. Maybe you get a little more the next month, but like it takes a long time to truly understand all of them, right? If you're going through trading, you got to understand that pattern that we're like trying to explain to people. You got to understand breakouts. But like listen to all these nuances that we just said here. I guarantee there's more you just haven't thought about. I'm still learning new ones too. Like it depends on the trade, right? And you have to see it enough times. You're like, oh, like I remember when stock XYZ did this 6 months ago. Or I remember, remember AWX 3 years ago when it just went to the moon over the summer because the float was cornered. Like those examples, like those lessons from just seeing it over and over and over again, that's why like only a very small number of people get it. And I would honestly even argue like it's the same. You see it in trading and all your traders, like the stat is famous. 90% of traders lose. Well, like what about small businesses? Like it's like 98% of small businesses fail. Like it's the same. It's the same sort of thing. And probably the ones that succeed, I'd be willing to bet. There's always those lucky stories. There's those lucky traders that get it the first time around. Sure, that's awesome. But it's probably you started a small business, you failed. You started a small business, you failed, and on like the third or fourth try, after like months or years of you doing it, you're like, I got this now, and now it succeeds. And that's why only 2% like. People can't stick with it that long. It's hard. It's worth it. And it's just hard.
Sorry to divert from the business example, which is great though. Which is actually great.
Like but passing the mic back to you.
Another thing to think about too is I noticed definitely like a lot of the traders that I've kind of showed the way I trade to.
Yeah.
They're beginning to understand like the setup itself, the pattern. But then it goes back to those other variables, those other pieces of confirmation. So they might take the right spot, but when I'll be selling because I see a factor coming in, like a big seller that they might not see, or for me, I hate seeing like big bid props just getting slammed through. So I might get out and they're wondering, okay, well, I'm holding to my risk and I'm losing, so I'll have a higher win percentage on the same strategy because of these other confirmation like variables that it's one of those things you learn through screen time, you learn over time. And so like there are pieces of an edge that expand the win rate and the risk reward of a strategy further, and it's something you'll continue to learn. Like I'm sure in a year from now, I will see way more variables like than I even see today. And I've been trading this way for, almost this exact strategy I've been tracking for over 2.5 years now. You know what I mean?
Yeah, but and I know traders have probably just heard you say that, and they're probably also saying like, well, but I do that and then it goes my way. They think FOMO. That's the next thing that comes up. So when it comes to FOMO, like, any advice around that?
Man, it's you gotta learn to deal with it. Like, cause I cannot tell you how many times I do it. Oh my, killed me on one of the Twitter pumps, Grom, I think it was. Oh my God, I bought in at like, I basically caught 50 cents a share on the move was like $4 immediately after I sold. And it killed me, but it's like, you know what? I traded it based on a way that has won for me hundreds of other times in the past, and sure, it kept working. It is what it is. And for me, one of the biggest things has been like learning to scale out, continuing to have a little bit of size so that if that move keeps going, at least, am I going to be making as much? Absolutely not. But at least I'm there. It's controlling the FOMO. Big for me.
You know, I want to, unless you want to go ahead and follow up on
I had something to add, and like maybe a glimmer of hope. Like, you gotta get FOMO under control, but there hits a point like that fear of missing out just doesn't hit you the same, right? You've seen enough of these moves. You're like, especially like after what we went through in 2020, like that's really like when it started to hit me, and I'd miss a move, and it was like, 10 minutes later, there's another one.
Yeah,
like, there's always going to be another one, and like, sure, those A+ setups will always hurt, but like, if you're in this game for the long haul, like, there's gonna be another one. There's always going to be another one. And like, if you get that really bad FOMO, just learn from it, right? Like, don't cause more damage. Just be like, man, like this happened, I missed it. Like, I'm not going to miss the next one. I'm going to make sure like I learn everything there is to know about this, and I'll come and get it the next time it comes around.
Yeah.
Do you think traders should like track something? Because I know they're going to hear art, right? They're going to hear art. It's artsy. There's a little bit of art to it. Yes, there's a big picture setup. So how do you, I don't want traders to be like, oh my God, like, okay, well, you say track and then you say it's art. So like, how would you suggest them to track something if it's an art?
Ooh, I love this question. For me,
yeah,
a lot of it, I mean, obviously, like, yeah, you're tracking some data. Like, for me, I'm tracking my win rate. I'm always like looking at the charts and everything. But one of the biggest things that's helped me is actually tracking the emotional side of my trading. So when I was really trying to get this strategy down, it was more about, I would create a journal for every trade I took that day and have a chart with my entries and exits. And then it was, what was the setup? Like, what was the intraday pattern that I bought out of? Why did I exit? What did I do right? What did I do wrong? How could I have improved? And stuff like that. And one of the biggest like game changers for me was when I kept writing out the same mistakes. Like, what did I do wrong? What did I do wrong? What did I do wrong? I was like, oh my God. Like, well, there's your data. There's your data. You see, like, for me, that was my data. Again, like, because I think the patterns, the daily patterns, like a multi-day breakout, that's pretty simple. You understand what that is. And now it's refining the entries, refining the exits. And the way to do that for me is literally writing it down. And because we all know hindsight is 20/20, right? And so the beauty of being able to journal is that you actually have hindsight working for you. Like, you have your exit that you might have screwed up, or your entry, and now you get to look hindsight and say, what could I have done better here? And what did I do wrong? Right. So I'd say that's the best.
I love that.
Yeah, that's how I would do it. And did it. Do it.
I got two things kind of to say here. Tracking your trades is huge, period. And because on day-by-day basis, if you're only looking like, today I did these trades, today I did these trades, like, you're not going to see a pattern. But over the course of a week or a month, like, that's when it'll be like, wow, I suck at breakouts. Or, wow, like, that first hour of the day, like, I'm horrible. But, like, in the moment, you're like, it's very tough to make the connection where you're zoomed in. And then, like, to relate it to a stock chart, like, if you're looking at a 1 minute chart, and you're not looking at the daily, like, there's a very different picture there, right? It's the same thing with tracking your trades, same concept. The second thing is, I had this really good teacher in high school that like taught like how people like learn, right?
Yes.
So like tracking data, like there's different ways to do it. There's like tactical learners, like hands-on people. I am very much a visual person, very, very much. And that's why like I gravitated towards printing those charts out and writing them. It's huge. And like, I'm like so bad to the point where like my girlfriend will like tell me something or like we'll read something out loud and I'm like, just like hand it to me. Like I just need to see the words myself. Like I hear you talking to me, but like it just doesn't process the same as like if I just see the words myself on paper.
Yes.
So because of that, like like I tracked the data and stuff, and I saw the numbers, and like it was helpful, and I was like, yep, like breakouts work. Okay, like now how do I do that? And like I gravitated towards that visual example. And if that's you, like that's a great tool. Print out the charts. Some people need to see the numbers. You know, it's totally different.
You know what? To wrap this up, first off, I love what you said and what you said, because it's both of those answers. Number one, they're tracking your journal, which basically you're learning, you're tracking your habits.
Yeah.
And the old saying is, you're not trading against the market, you're not trading against someone else, you're trading against yourself. So that was goal. So rewind that and listen to that. And then on top of that, know how you learn.
Right.
You know, some people learn by tracking their emotions, and maybe he's doing that right now, or she's doing that. And she's like, I'm not learning, Bryce. You're telling me that it's not working. But maybe you need to print out all the charts and look at everything and understand how you learn. So appreciate you both saying that. Appreciate y'all both being on the show. And real quick, Matt, because you're both on the same platform.
Yeah.
So Matt, can you let people know how they can reach out to y'all if they have questions? And then of course, Bryce, let them know your Twitter as soon as he's done with that. And thanks. Go ahead.
Yeah, so Stocks to Trade is where it's at. We are actually in Small Cap Rockets, which is like a subset of Stocks to Trade, but we post everything on Stocks to Trade YouTube. So just Google Stocks to Trade. We do live trading there. We do recaps. It's awesome. I'm pretty sure you've been on our podcast, The Steady Trade, right?
Yeah.
Absolutely.
A long time ago. Yep.
It's an awesome resource. So in like the YouTube channel, everything on there is free. Check it out. We'd love for you to subscribe. You'll see us a lot more if you like our artsy nature. So.
Yeah, and you can find my painting in the Louvre in France, the Mona Lisa. No, you can find me on Twitter, Trader Bryce. Like Matt said, we're on Stocks Trade all the time too. So
Yeah. Well, look, guys, I appreciate y'all so much for being here. It was a pleasure, and man, we'll have to do it again sometime.
absolutely, this is so much fun, man.
Take care, everyone.